wanted to take a minute to offer some insights into the things we're seeing in the equity markets today. We're experiencing a rather large bifurcation of performance in the S&P 500. And so I'm going to throw some facts at you and some numbers, and they will be as of the year to date at the end of May. The S&P 500's up about 8.8%. There's been a small group of companies that have really been driving the outperformance or this performance in the markets. Within that small group, there are 7 companies that make up 26% of the entire S&P 500. Now, if you pulled those companies out of the performance for the S&P 500, the entire index would actually be negative. 76% of the S&P constituents have actually underperformed the S&P. 56% have actually have negative performance. So you might ask, how is that? How do you have it 8.8% and you have this small group that's doing well and the rest aren't? Well, ultimately, the S&P 500 is market weighted, right? So the larger the company, the more impact it has. In fact, 35 companies make up 50% of the entire S&P 500. So market weights have a big impact on the overall performance. Now, let's just look at it from an equal weighted standpoint, right? So if you equally weighted every single one of those 500 plus companies in the S&P 500, what would the performance be? Well, it's actually negative for the year to date. And so historically, if you look over the last 20 years, you see that equally weighted S&P 500 has outperformed pretty meaningfully that of the market weighted. But we're going through this small window right now where a small group of companies is really pulling up the rest. So this is a big deviation from the norm, and there's a tremendous disparity in returns within the S&P 500. And this is important to recognize because it creates opportunity. There's some companies that are really undervalued and some that are overvalued. And of that small group that's really outperformed, some of those companies deserve it. They've done well, they've executed financially, and they deserve to be running up in value. But there's also a group that's now overvalued, that has run up based on expectations of nothing that's actually occurred yet. And so, we expect to see, and this is the reason we feel it's an opportunity right now, we expect to see a reversion to the mean, where some of these companies that are overvalued should be pulled back, and some of these companies that haven't been rewarded for executing should kind of move up. And so, identifying those and properly positioning can have a big impact. So we just wanted to take a minute and call this to your attention. We've put together a much longer video, it's probably about 10 minutes, that actually walks through what we've done, what we're doing, how we're positioning to take advantage of this. And if you're interested in it, go check it out. It's on our website and under the capital markets section, and I hope this has been helpful.